You've heard of cash on cash ROI, but what does it actually mean? I'm Antonio and I teach beginner real estate investors how to buy their first investment property. Cash on cash ROI stands for cash on cash return on investment, and it's the percentage of money you will make back in your first year after putting money down to buy an investment property. So I'm gonna show you a basic example first. This way you can see just how the numbers are. And then afterwards, we're gonna go through a real calculation with a real live property that I have and how you can determine the cash on cash return from that. The formula for cash on cash ROI is simple. It's pre-tax annual cash flow divided by the down payment and the closing costs. To make it even more simpler, it's the amount of money you've profited in your first year of owning an investment divided by how much money you had to put down to get the property. The way you get this number is first determining the cash flow you made on the first year, or you would make on the first year. The cost of buying a property is pretty easy too. It's just the down payment plus the closing costs. So whatever you put down while signing the contract to get the home. For a basic example, let's assume you're buying a property that's worth $200,000 and you're gonna put a $20,000 down payment down. Yeah, that makes sense. We cash flow on this property $350 a month. Assume that we did the calculation properly and that's how much we're making. So we need to first figure out the numerator, which is pre-tax annual cash flow. So that's monthly cash flow times 12. 350 times 12 is $4,200. So we have $4,200 that we made at the end of the first year. But how much is the down payment? 20% of $200,000 is $40,000. Let's assume that closing costs are 5% of the property, so it's another 10. So total we got 40,000 plus 10,000, that equals $50,000 we put down with closing costs. So the formula for calculating cash on cash ROI is 4,200 over 50,000. That gives us an 8.4% cash on cash ROI. What this means is that we are now making 8.4% of our original investment to buy the property back on the first year in which we bought it. Let's do a full example with a real property that I own, because no one's gonna tell you what the cash flow is in real life. You're gonna have to figure it out yourself. So the home that I bought was $195,000 and we put a 25% down payment on the home. So that equals $48,750 we put for the down payment. Now the closing cost was about 5% of the home value as well. So the property value times 5% was equal to $9,750. So the total cost to acquire the property is the closing cost plus down payment, and that equals $58,500. Okay, so now we need to calculate the numerator, which is yearly cash flow. So the formula for yearly cash flow is simple. It's monthly cash flow times 12, because there's 12 months in a year. Cash flow monthly is easy too. It's just cash flow monthly equals income minus expenses. So we have income minus expenses. The income is just the rental income. That's all we have on this property. And the rental income comes from 3 units because it's a triplex. So unit 1 gives me $1,000 a month in rent. Unit 2 gives me $850 a month in rent. And unit 3 gives me $750 a month in rent. So if you add all 3 of those together, you get $2,600 a month in rent. That is our income number for monthly cash flow. Now we need to calculate our expenses to figure out how much we need to subtract from our income so we can get our cash flow. So first is mortgage, principal, and interest. That costs us $723.97 a month. Then we have our monthly taxes. Monthly taxes is just yearly taxes divided by 12. Our yearly taxes are $5,055 a year. Divide that by 12, that equals $421.25 a month for taxes. Our insurance costs us $1,596 a year. If you divide that by 12 for each month, you get $133 a month for insurance. Water and sewer costs us typically about $60 a month. Now, electric and heat, that's paid for by the tenant. Garbage is covered by property taxes, so that's also zero. We don't need to worry about that. Now we have our property management. That's 6% of the monthly rent. So 2,600 times 0.06, and that equals 156 a month to property management. Then we have repairs and maintenance. That's about 8% of our monthly rent that we're putting aside. So 2,600 times 0.08, that equals $208 for repairs and maintenance. Then you have capital expenditures. Capital expenditures are the same as repair and maintenance. It's 0.08 times 2,600, and that equals $208 a month. Then we have our vacancy, which is 5% of the monthly rent that we're storing to the side in case of vacancy. So it's 0.05 times 2,600, and that equals $130 a month aside for vacancy. So 2,600 minus all of our expenses, which is equal to $2,040.22 a month. That equals $559.78 of cash flow per month we're making on the property. That's our monthly cash flow. Now, in order to get yearly cash flow, we need to multiply that by 12. So we take $559.78 and multiply that by 12. That gives us $6,717.36 as a yearly cash flow on our property. So we'll take our pre-tax annual cash flow for the first year, which is $6,717.36, and divide that by the closing costs and the down payment of our property, which we calculated earlier, which is $58,500. That equals 11.48% cash on cash ROI.
Boom, 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 boom. I want you in my room. Let's spend the night together from now until forever. Boom, 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 boom. I wanna go boom, boom.
How do you use cash on cash ROI in a sentence? You would say, this property gives me 11.48% cash on cash return on investment. Now, if it was negative for some reason, which you should never buy a property that gives you negative cash on cash return, you would say, this property gives me 11.48% negative return on investment. So why do you even need cash on cash ROI? Cash on cash ROI is used to compare this investment versus any other type of investment you do. So for example, the stock market is going to give you 8% cash on cash ROI. You can compare that to this home that we got. The home has a 11.48% cash on cash ROI. So when you compare the two, what has a better ROI? The home. Now the home takes a little bit more work, and you have to determine if getting the home is worth the extra work of just putting in the stock market for the 3.48%. And if you take into consideration appreciation, tax benefits, and everything else, I think that the home is worth it. So you can do this to compare your real estate investment to your investment in maybe a business and what the rate of return would be there versus the rate of return on the stock market or Bitcoin, whatever other crazy shit you're doing these days. Now that you know what cash on cash ROI is, the next thing you need to know is appreciation. Click subscribe to not miss out on the next video. It'll come out in 2 weeks.